Good afternoon, traders. This is Tony D from easyMarkets in Sydney. We've had a fairly eventful night in terms of market movement. The US dollar looks like it was coming back at the start of Europe, but quickly reversed, tacked again. You saw the dollar yen leading the way higher at the start of Europe, all the way up to 111.12 before fading. This was on the back of comments from the press conference from the BOJ, Kuroda, trying to emphatically get the market to believe that the BOJ is not tapering. They are got the committed to buying bonds until they hit their 2% target, which they're not likely to hit shortly. But there was a fair bit of upgrades in some of their forecasts as well. So the market took it with a grain of salt, and it's still playing the theme that the BOJ will move sooner rather than later. Have discounted Kuroda already, and we're back at 110. And this is at the same time that the euro is back breaking out of its wedge. You can see here getting up to 123 overnight. Pound reversing after losses earlier in the day, back above 140 now as well. So we're looking at a situation where it's very hard to fight this US dollar trend. Dollar index has made a big move below 90. Now we're talking going back years before we get back to these levels. In fact, we're going to have to change to the weekly back in 2014. So this is as the US was coming out of its tapering and starting to talk about raising rates. You saw the market front load and rally sharply. Most of those gains happened in 2014, 2015 US dollar rally, and this really hasn't kicked too much higher than that since. Now we're breaking back below. You've still got a huge amount of room here, all the way back down to 85 is the next big sort of support. So that would put the euro back towards closer to 130, and the pound closer to 150, and the dollar yen 105 to 100. If this was to be the new levels that we're going to be targeting this year, and it's basically each country does have its time in the sun, and it is 2 to 3 years generally before the big moves happen. So the US dollar has had its rally, and it's the fact that they're raising rates is not a support for the US dollar anymore, because they're already factored in. The big risk for the US dollar is if they don't raise rates this year. That's where you get the extended US dollar weakness. And as the ECB moves closer to ending its QE, the euro is driving most of these gains and really leading the whole pack forward. And we're closer to every central bank around the world raising rates now, normalizing along with the US. So there is a little bit of the time in the sun now is done for the US. You may see brief spurts of backup, but high yields aren't helping as well. So there's a huge new shift in the regime, and it looks like this year is all about the euro and potentially the yen, unless the BOJ can really get a hold of this market's new view that the Bank of Japan is going to be tapering and potentially adjusting its monetary policy later in the year. Stocks continued their rampage higher after the official government shutdown was reversed. Now, that's all good and good and done, but there's now a new little issue in the horizon for stock markets. We're looking at these tariffs that the US have just placed on solar panels and washing machines, and the reaction we're getting from Asia is not positive. They're quite unhappy with these new protectionist measures. If there is a continuation, and we are seeing the market was going to be reacting to tit for tat in this going forward, you would potentially see the market then play that to a negative downside. Now, what's the worst case scenario? Well, the worst case scenario is a full-on trade war, and which country is most hurt by that? That would be the Australia. Australia is a proxy for China, and you are seeing the Aussie dollar was heavily sold in Europe on the back of that theme, and it was the worst performer overnight. Didn't really rebound too fast as well when we did get the rebound. So it's still under fresh lows, sorry, not making fresh highs, where everything else is making fresh highs, because it is the most vulnerable to any of new developments here in this potential trade spat between China and US, and also South Korea. At the moment, South Korea said they're going to go to the WTO to try and challenge this latest tariff, which they say is not part of international norms. All right, so yeah, interesting times in the markets, and we'll just play the new trends. Though you can't really fight the US dollar trend just yet. We will have a little bit more information about the euro side of things coming from Draghi tomorrow, and we'll focus more on that in the update tomorrow. So give us a call today or tomorrow. We'll have a chat about the ECB, but that's the next big thing on the horizon. That's really where you might see the market pause in its euro rally. That can open the door for the US dollar to have some form of reversal as well.